IBC Advanced Alloys. We all know and understand that many things are produced with a mold or a cast, which you're going to hear about tonight, as it's the cheapest and most effective way to ensure consistency versus machining individual parts. And you'll know and learn more about this in a minute. However, it's another thing altogether when you're trying to marry advanced alloys in a repeatable cast process while on a quest to produce a part with extraordinary qualities that is significantly more economic than the accepted industry norms. It's been a frustrating journey for IBC Advanced Alloys, but it's arrived, and it's proven it can be done. It only took 3 years for testing, proving, and multiple hair-pulling meetings, but 2 months ago, Lockheed Martin gave IBC a purchase order for the first castable beryllium aluminum alloy component. This is a mouthful, for the electro-optical targeting system on the F-35 Lightning II fighter jet. And this is under the Engineered Materials Division. It doesn't take a lot of imagination to appreciate the level of comfort Lockheed required to issue that purchase order, thus displacing a large historic supplier as it relates to this one part. It's also not a leap of faith that a number of other companies have been watching this development, and doors that IBC had cracked have now opened considerably wider. There are also other serious discussions with Lockheed about other applications, but the focus is getting Part 1 successfully delivered. Now, if you look at the stock chart since Lockheed's news, it's not pretty. The market obviously expected a large number rather than the $2 million contract value. But let's keep in mind this is a small, short-term contract for a small number of parts. So it's the initial contract. And I was listening to a streaming broadcast of Anthony Dutton, who's the CEO you're going to hear from in a moment. He was at a Disruptive Technologies conference in New York on Monday. And what he said is that this one part alone to IBC should be worth about $80 million if IBC is successful in being there for the life of the F-35 program. So it also has a copper alloys division, which suffered a bit of a revenue drop in fiscal 14, but the margins came up, so it actually was able to generate more cash flow than it had in the previous year. So here's a company that's been grinding it out, has convinced and impressed Lockheed Martin, and we've got a market cap on this of $11 million. So the questions are, what is the potential? Why did Lockheed choose IBC? And with an 11 million market cap, which is significantly less than fiscal 14 revenues, I think with that I'm going to turn it over to Anthony Dutton to address those questions. Anthony?
Good afternoon. Thank you very much. Always nice to be in Montreal, one of my favorite places. As Grant has said, the hair-pulling, grinding meetings, those continue. I apologize that after this presentation, I'll be able to hang around for about half an hour, and then I'm going back to Boston to meet with none other than Lockheed, who are talking to us, obviously, about our existing contract, but a number of other opportunities as well. So it's a meeting that I should probably attend. So the legal disclaimer, forward-looking statements, I don't need to walk you through that. They're fairly standard. Contents, I'm going to cover our business, our markets, our future growth potential. A little bit about the company. As Grant has already said, we have two divisions to the company. We have a copper beryllium alloys business, and we also have a beryllium aluminum castings business. The copper beryllium business is more of an industrial, organic growth business. It's been around for quite some time, turning in about $17 million a year of revenue this year. The other side of the business, which is where I'll be visiting just outside of Boston tomorrow with Lockheed, is our casting division, which is where this new alloy was developed, this new process was developed, and where we expect all the significant future growth to come from. There's still growth potential from the copper division, and quite a lot, but there's real hockey stick potential out of the out of the EMC division. As Grant has already said, it's a proprietary casting technology that was validated by Lockheed earlier this year, and we're very optimistic about the growth potential for that side of our business. I'm not sure how many of you know much about beryllium. I actually have a piece of it back on the table there. Also, some of our cast alloys are back there as well, but beryllium is a very, very unique metal. It's the second lightest of all metals after lithium. It's got phenomenal thermal conductivity. It's extraordinary, as I said, light, very, very stiff, which is why Lockheed like it. They want something that's light and stiff to hold up an optical targeting system unit. It's got, as I said, very good thermal conductivity. So in applications like a jet fighter, where you're going to go from the temperatures of the desert, for example, if you're launching your aircraft in Dubai and you're flying to 60,000 feet where it's minus 100, you need to have a material that's not going to expand or contract and unalign, if you will, the optical targeting systems that it supports. It can be used as a pure metal, and it's a fairly large market as a pure metal. We, however, focus exclusively on the alloy side of it. And I said earlier on, copper, you add beryllium to copper, you make it as hard as tool steel. You add beryllium to aluminum, and you make it extraordinarily light and very, very stiff. Our business is really divided, as I said, into two divisions, copper and engineered materials. We do, however, also have what we call an R&D division, which is primarily supporting a very exciting nuclear fuels technology that uses beryllium oxide. We don't do that in-house, but we support some R&D at Purdue, Texas A&M, and MIT, and that's got some very, very significant game-changing potential, although it's some ways out. So on the copper alloy side of our business, these are the markets that we serve: automotive, oil and gas, electronics, high-end plastics. Some significant growth opportunities in there. I actually have with me here today our VP of Biz Dev for the copper side of the business, Doug Veach, who's in the back of the room with me there. So if you have any questions about the copper side of our business, he'd be the best one to answer those for you. On the engineered material side of the business, it's primarily aerospace and defense. Our current focus anyway. And the reason for that is that those businesses are already using a lot of beryllium aluminum. They, however, use it, as Grant has said, as machined parts. We've now got the ability to deliver those exact same parts, but as castings at a hugely disruptive difference in price. And that's why we're so excited about our future and also the disruption that we bring to this market, because we're in effect delivering something that already is being used by Lockheed and virtually every other aerospace company, but we can now deliver it thanks to a process technology, not a metallurgical technology, but a process technology at sometimes up to more than half the cost. That's a big delta. So we have 4 facilities in the U.S. The top 3 are focused on our copper alloys division. The bottom one, where I'll be tomorrow, is in Wilmington, just outside of Boston. We own the copper alloys division in Franklin. It's 12 acres in an industrial park. That's ours. So our current facilities, as I said, 3 facilities at copper. We've got a lot of excess capacity there. In engineered materials, we're operating at very low capacity. The reason for that is, before you engage with Lockheed or any aerospace company on a new product, new opportunity, you've got to actually have the physical plant. You can't just give them a back of the envelope idea and say, hey, what about this? So we had to go out and build a pretty significant facility in Wilmington that cost us about $8 million. And we couldn't actually begin to engage with Lockheed until we had done that. So we're running a very small amount of business through that facility, but now ramping up with Lockheed and some other anticipated aerospace business, we will start to increase our capacity utilization there. The limiting factor of our capacity is the number of furnaces we have. We currently have 1. We're configured for an additional 3. So the objectives at our copper alloys business is really adding additional incremental margin. As Grant said, our revenues did drop this year. That was partly by design. We were kind of ridding ourselves of low margin business and focusing on the higher margin work. And that's something that we're going to be continuing to focusing on going forward. On the engineered material side of the business, we had some very specific targets. Obviously, deliver the components to Lockheed, which is well underway. Touch wood, that should happen Q1 next year. We want to purchase a second furnace, which is going to give us some additional capacity and built-in redundancy. So a lot of excitement in the engineered materials division, specifically around the aerospace opportunity. The growth drivers, really, I'm not going to go through this. They're pretty standard growth drivers on the engineered materials side for us. So it's continuing to bang away at the existing users of beryllium aluminum. As I said earlier, it's not only Lockheed, but Northrop Grumman, BAE, Boeing, they all use beryllium aluminum. And so that's going to be our initial market. That's a $200 to $300 million a year market easily. And we think we've got a very good chance of disrupting the large $1.5 billion supplier to that market. So just to give you an example, why is beryllium aluminum so fantastic? Well, there's none other than this particular chart that shows you. The stiffness to weight differential between the other materials is like night and day. So if you go back to our table back there, we have a piece of a piece of steel and a piece of beryllium aluminum alloy. Just lift the two up and get a sense of the difference in weight, bearing in mind that they have identical stiffness. So for aerospace applications where lightweight and stiffness are critical design factors, there really is no other material that's better suited for those applications than beryllium aluminum. So on our cast performance alloys business, again, these are the things that people like about us. We are a pure play beryllium aluminum and beryllium alloys company. The other large player is a diversified industrial conglomerate. So we are much more focused on our customers' needs. We can deliver faster. We can do a lot of things more quickly than our competitors, which makes us an attractive choice. As I said, the nuclear fuels opportunity is a bit further out, but it's massive in terms of its potential. Essentially, in a nutshell, what happens if you add beryllium oxide, which has got a very, very, very high thermal conductivity, is an excellent conductor of heat. If you add it to uranium oxide, you increase the ability of the fuel to effectively void itself of heat. So in some of the situations, like in Fukushima, for example, where we had a huge buildup of centerline heat, and there was nowhere for that heat to dissipate to, having beryllium oxide as a component of the fuel allows the heat to dissipate. We have been working on this since 2010. We've had some significant buy-in from none other than GNF. For those of you that aren't familiar with GNF, that is the Global Nuclear Fuels joint venture of GE, Toshiba, and Hitachi. And they like our fuel technology because it dramatically improves the safety, but also improves the economics for reactor operators. So future growth, again, I think I've kind of touched on this, but it's really going to be driving additional higher margin business through our copper alloys facility and bringing in some additional value add capacity like machining, extrusion, that sort of thing. And then over at the Engineered Materials Division, again, it's just out there making as much noise as we can about delivering beryllium aluminum as castings as opposed to machined parts. And having Lockheed having already validated this technology is a phenomenally powerful endorsement. Bit of our corporate summary, as Grant said, our revenues did drop. Again, that was partly by design, partly by things beyond our control. The price of copper is a big one for us as it passed through, and then also the economic recovery in Europe is nowhere near as strong as it is in North America, and about half our business comes from over there. Our shares, as Grant has also said, are trading at roughly a 52-week low, which is astounding given that we have the potential that we do, but I think that's a reflection of the markets as well as anything else. And share structure, 80 million shares outstanding. We do have a number of warrants that are in the money at 18 cents. They expire in February, so we're hoping that we'll see some appreciation in the price between now and then and those warrants exercised. I think this is the chart that everybody here today has in some variation spoken about. I was in New York, as I said, on Monday, speaking to a group of American investors, and they thought that, this chart here, the one at the bottom right, was upside down. But, that is the reality of us venture exchange issuers. Everybody I met in New York is, gleefully counting the record-sized bonuses they're going to get this year on the top of a record-high Dow, NASDAQ, and S&P, and people living on the venture exchange are having a very different reality. Some of the comparables of the companies that we look at, again, I'll let you go through this in your leisure time, but essentially what's important to understand is that if you do an analysis of our company based on existing comparables, primarily US companies, and look at revenue multiples combined with an EBITDA multiple on our copper business, you should be getting a valuation for IBC somewhere in the $30 to $40 million range. If we were to trade on the NASDAQ tomorrow, by all of the numbers that we look at and process and Europac as well, we should see that kind of immediate value bump on an exchange arbitrage position. We have a very, very strong board, specifically top middle. Major General David Hines is a key to our aerospace success. He was the program executive officer for the F-35 program before he retired 3 years ago. In other words, he reported to the Secretary of Defense on everything to do with the F-35. We could not have a better ambassador for our technology and for our company. He's taken us into the C-level suites of companies like Lockheed and others, and he's a huge, huge benefit to us. A number of these other people, they all have their very strong roles to play. The other one I want to mention by name is Jim Malone on the bottom left there, who drives our nuclear fuels initiative. He, for 15 years, was the head of the nuclear fuel cycle before, current, and after for Exelon, which is the largest operator of nuclear power plants in the United States, generating 17% of the electricity consumed in the U.S. When I explained to him back in 2010 about the potential of our fuel, he was ecstatic. He thought this was fascinating. And when he retired from Exelon, he joined us as our VP Nuclear Fuel. You may also recognize him as he was chairman of Hathor before it got taken out. So thank you very much. I hope I stuck to my 15 minutes there. Thanks.